Hello, and welcome to China Forum, the leading program for discussing the latest in trends and developments in modern Chinese culture, politics, economics, and social issues. My name is Shannon Tiezi, and I will be your moderator for our program today. Today, we are glad to welcome a distinguished scholar to China Forum, Professor Pieter Bottelier. Professor Bottelier is a senior adjunct professor of China Studies at the School of Advanced International Studies at Johns Hopkins University. Professor Bottelier is also a visiting scholar at the Carnegie Endowment for International Peace. He has held various World Bank positions, including chief of the bank's resident mission in Beijing. Professor Bottelier has also served as a consultant to the United Nations Conference on Trade and Development, the conference board, several U.S. government agencies, and many private companies. He was also a Harkness Fellow with the Commonwealth Fund and a research associate at the Brookings Institution. Professor Bottelier, thank you so much for joining us today. It's great to have you back on the show.
Thank you, Shannon.
Today on China Forum, we will be discussing the challenges and opportunities facing China's economy. To begin with, Professor Bottelier, could you share with us your opinion on the recent reports of an economic slowdown in China's growth?
Sure. There is a slowdown globally, and many people misinterpret the Chinese slowdown. Chinese economy is not collapsing. It's slowing down, has been since the middle of 2011. But to a very large extent, this slowdown in China is the result of deliberate government action, which makes the Chinese slowdown very different from the European slowdown or the American slowdown or the Brazilian slowdown.
Could you tell us a little bit more about these government reforms and actions? What is the purpose, and how planned is this slowdown?
Well, there's three major reasons for the Chinese slowdown. One is imposed upon China by the rest of the world. That's the slowdown in Europe in particular. The European Union is China's largest single customer. The second reason, and China, of course, is a major exporter, so when export demand slows down, that has an effect on the economy. But more important are two domestic factors. One is the end of the stimulus program. China discontinued these enormous investment programs, particularly in infrastructure, already in 2011. And the second reason, domestic reason, is that they were very concerned about the housing bubble in major cities and took measures to curtail demand for housing in those cities. And the slowdown in the demand for housing has caused the construction of new housing, which is an important part of the economy, to slow down. So these are two domestic factors and one external one, and I believe the two domestic factors are more important.
Right. So because of this, China has revised its growth target from 8 down to 7.5%. And there's some rumors that they might not make that target. What effect is this slowdown of China's economy having on the global economy, and is this becoming kind of a reinforcing trend?
Yeah, the effect is serious because China has become such a large player in the global economy, even though the US remains by far the largest economy. On the margin, as a change factor, China is now the largest player on global commodity markets because it is growing so fast. So a slowdown in China has significant effect on supplying countries, particularly commodity supplying countries, Australia, Brazil, Argentina, Canada. It would not have a great effect on Europe or the United States.
Okay. What would you say are the best and worst case scenarios for the Chinese economy over the next couple of years in terms of their growth?
Well, the best case scenario is that the Chinese economy begins to pick up again in the second half of this year as a result of domestic policy actions, such as a relaxation on the purchase of housing, apartments in particular, and secondly, a resumption of some stimulus in the form of government support for infrastructure investment, but not nearly at the scale that we have seen in 2009 and 2010. If all that works out and we don't see a complete collapse in the external markets, particularly in Europe, there is a better than even chance that the Chinese economy will begin to grow a little faster in the second half of this year. In the worst case scenario, we get an external collapse of the euro, for example, and delayed policy action within China. If they are too late in addressing the slowdown, then the slowdown could go down too far, and that would be potentially a very bad scenario both for China and for supplying countries.
Let's talk a little bit more about these domestic factors first before we get into the global factors. Premier Wen Jiabao of China especially has mentioned some fairly meaningful reforms. He, for example, called for breaking up the large state-owned banks. Do you think this represents a new push for reform, or is this just an extension of rhetoric that they've been using over the past couple of years?
I think Premier Wen has been keen to lower expectations in China and in the rest of the world about China's overall economic growth rate this year. He has stated very publicly that the official target for this year is 7.5%, which is lower than the sort of almost proverbial 8% that everybody believes is China's official target. He has also stated very publicly that China now has to go forward with significant further economic reform, but he has also mentioned political reforms. So my overall sense is that the current Prime Minister, Wen Jiabao, who will step down, of course, at the end of this year, is very keen to make sure that the structural reform objectives remain very prominently on the table, and that he is willing to accept a lower growth rate in order to achieve structural economic reforms within the Chinese economy.
Okay, so you think that the top Chinese leadership is committed enough to these reforms that they're willing to sacrifice some short-term economic growth?
I believe so. Many people are skeptic or even cynical about it. I don't share that. It is the most important objective of the 12th five-year plan, which started in 2010. It was already a major objective of the previous five-year plan, but the objectives of restructuring were not achieved, mainly, I believe, because of the big global crisis that started in 2008. I have seen many indications of seriousness on the part of top leadership about the structural reform objectives.
Well, of course, as you mentioned, we're going to have a major leadership change later on this year with President Hu Jintao and Premier Wen Jiabao being replaced, and many members of the Standing Committee of the Politburo also. So what effect do you think this influx of new leadership will have on the reform programs that Premier Wen is advocating for?
Well, if history is a guide, there will not be a major change in policy. One of the characteristics of China's economic policy making since the start of the market reforms in the late 70s has been continuity of purpose and instruments.
Okay. Well, let's talk a little bit more in detail about what reforms we're actually talking about. One of them that received a lot of attention in recent months was the Wenzhou pilot program, which is supposed to allow residents of Wenzhou to invest more directly in foreign markets. What sort of impact do you think this will have? Is this a trial run for maybe a larger opening, or is it just a limited reform?
It's limited in scope at the present time, but it is best seen as part of a series of measures in the financial sector and in the economy more broadly, aimed at further liberalization of the entire financial system. The Wenzhou reforms are limited in scope. They may or may not be extended to other citizens of other cities, but they are important as part of a picture. We have seen some relaxation of restrictions on interest rates recently, on deposit rates and on lending rates. We have seen a further opening of the capital account to private foreign capital inflows, portfolio money to the stock exchanges. We have seen an opening to Taiwanese bank branches. The 10 Taiwanese banks have been given a license to open a branch in China. We have seen a widening of the trading band for the renminbi, all within the past 5-6 weeks, 2 months I should say. So the Wenzhou measures are not important by themselves, but as part of an overall picture.
Okay. And again, as part of this overall picture, there seems to be an emphasis on helping small and medium-sized businesses find sources of funding, of loans from the state-owned banks, which previously people had complained that only China's state-owned enterprises had access to these loans. So why is the Chinese government starting to promote this now? Is this part of their long-term economic restructuring?
I believe it is. There has been a popular notion that private enterprise, medium and small scale enterprises generally were blocked from access to official financial resources. But if you look at the Chinese financial statistics, that is not confirmed by those statistics. As my colleague Nick Lardy pointed out at a recent meeting in Beijing, the statistics show almost the exact opposite. That is, there is a rapidly expansion of lending from official sources to SMEs, small and medium enterprises, in spite of the popular opinion to the contrary. Now, I think that the government is somewhat concerned that the slowdown may go too far. They have made a lot of statements about the importance of private enterprise, medium and small scale enterprises as the major source of future dynamic growth and employment. So there is an expectation that they will be given further relaxed access to official financial resources.
Okay. Another reform that they've been trying to do has to do with real estate, which you mentioned before. China's banks do not give great interest rates, so a lot of people have been investing in real estate, which seems to have created something of a housing bubble. And now there's speculation that the government is trying to pop this bubble. What effect do you think this will have on investment patterns in China?
Ooh, that's a complicated question. You are correct in saying that the artificially suppressed deposit rates in China have been a factor in the real estate bubble in major cities. More and more Chinese with some money find it unattractive to put their money in the banks as they used to. So the other opportunity, the alternative opportunity is to buy more apartments. That is quite correct. But you should also realize that the picture is rather complicated. The banks themselves have been facing a declining deposit rate, and in response to that and the fact that so many of their customers complain about the low deposit rates, have been offering wealth management products with interest rates, offering interest rates significantly above the official government controlled rates. And that's a rapidly growing part of total financial liabilities of the banking system.
Well, another factor in this obviously is the state of the Chinese stock market, because in America when we think of investment, a lot of times we think of stocks. How does the state of the Chinese stock market play into these investment decisions?
The Chinese stock market is the world's worst performing, whilst the economy has been the world's best performing. That's an anomaly. There is little confidence on the part of the Chinese public in the stock exchanges in Shanghai and Shenzhen. There has been too much speculation, too much insider trading, and the performance of share prices in China has been dismal, especially since the collapse of share prices at the end of 2007.
Okay. Let's move on to one issue that I know is close to the heart of American politicians, and that is the value of China's currency, the renminbi. American officials are always trying to get China to appreciate their currency, and as you said, they've been taking steps in this direction. From the Chinese perspective, how does appreciating the currency help their economy? And how will these reforms contribute to altering the state of the global economy?
The Chinese currency became undervalued around 2003, 2004, not because anything the Chinese government did, because they didn't do anything, but because their exports began to exceed their imports by a growing margin. The trade surplus and the rapid reserve buildup led to an undervaluation of the currency. That became a very significant issue in the bilateral relationship, not only between China and the United States, but also China and the Europeans, China and the Japanese, China and many other countries, Brazil in particular. So they began to adopt a different policy in the middle of 2005, and they delinked from the US dollar, and we have seen gradual appreciation of the bilateral yuan dollar rate since that time. They discontinued it for a while in 2008 in response to the dropping exports when the international crisis was building up. But since the middle of 2010, they have resumed fairly aggressive appreciation. If you look at the current exchange rate, compare that to what we had at the middle of 2005, the nominal renminbi dollar rate has appreciated by over 30%. But if you compensate that for differential inflation, so you get something like a real yuan dollar rate, it has appreciated by over 40%. If you go beyond that and not look at the differential inflation, but the GDP deflator, that's a complicated concept, but economists attach a lot of importance to that, particularly in this context. The renminbi has appreciated by well over 50% since the middle of 2005. So it's very hard to argue in light of that. And if you add, in addition to that, the observation that China's trade surplus has come down significantly as a percentage of China's GDP, it's very hard to argue that the currency remains significantly undervalued today. It may still be undervalued, but by not nearly as much as it was 5 or 6 years ago.
Also, continuing on the subject of the yuan, Beijing seems to be trying to slowly make the yuan into more of an international or global currency. What do you make of their efforts so far, and how important do you think this is long-term for China's economy?
It's very important. It started after the collapse in global trade following the collapse of Lehman Brothers in September of 2008. World trade shrunk by a significant margin very suddenly. Why? Because export financing, trade financing became very hard to get. And since most world trade is dollar financed, is traded in dollars, China took the conclusion that they had to protect themselves by making their national currency a more important trade currency. And they began to push out the renminbi as a trade financing currency basically from the middle of 2009 onward. That's a very important process. Whether the currency will ultimately also become a dollar-style reserve currency is, in my opinion, uncertain at this point, because that requires very significant additional steps. But the internationalization of the renminbi as a trade financing currency is progressing very rapidly.
Okay. Let's move on to some questions about the broader global economy. You mentioned that China's economy is obviously tied into the world, and the potential of a collapse in the euro would have huge consequences for China. So what sort of outlook can we take for the Chinese economy and their reforms, which are dependent on the economy maintaining some sort of health, based on your predictions for the global economy?
Well, that's a big question again.
Yes.
You're right in pointing out that China's economy has become very integrated, very deeply integrated with the global economy, much more so than other large emerging economies, even much more so than Brazil or Turkey or Indonesia or India or even Japan. So we now have a globalized Chinese economy that is facing a slowdown in the United States, a potential big crisis in Europe, and other problems, a slowdown in India also. Since China has, together with the United States, been one of the major beneficiaries of globalization, and since the entire economic reform program in China still has quite a long way to go, because they still have several 100 million people in rural areas that have to be absorbed in the modern economy, which requires another 1 or 2 decades of high growth. Given the history of this globalization and China's having been such a major beneficiary, it is very unlikely that China will turn its back on the WTO or globalization. If they do, we would all be in trouble. Yes. There is, of course, like in any country, significant internal discussion on how far and how quickly China has to further open its economy. On the financial side in particular, we have similar debates in this country, we have similar debates in Europe. That is not surprising. But I have hope that the liberalizers in China will ultimately prevail, and that the election or the selection of a new team in October, the top party leadership, will confirm this expectation on my part.
Obviously, part of being integrated in the global economy is investing in other countries. And China has repeatedly expressed an interest in being able to invest more in America, and complain that America's doors are kind of shut to Chinese investment, which is something that Ambassador Gary Locke and the Obama administration have promised to work on. How serious do you think the American government is about opening to Chinese investment, and what sort of impact would that have on China's economic growth?
Well, it's a very important issue. You're right in pointing out that so far the actual Chinese investments in the United States, and all of this really started only a few years ago, basically 2005, is very small. Chinese investments is very big in Africa, in Latin America. It's much bigger in Europe than it is in the United States. If you look at the first quarter numbers for this year, China's outward investment was over $20 billion. Only $8 million of that was realized investment in the United States. Now, the US government has official procedures for screening foreign investment proposals, that's the CFIUS, led by the Treasury Department, to screen foreign investment proposal from a security perspective. That is a very important instrument that the US government has to have, and many governments have that. But there is, on the Chinese side, a perception that the official parties in the US economy, particularly the US government and Congress, are too conservative, that they're too reluctant to admit Chinese investment in the United States. One example, already 3 years ago, the Chinese proposed through their sovereign wealth fund to participate significantly with billions of dollars in the upgrading of the American electricity grid. Nothing has happened so far. Not because the US government has said no, but because in this particular case, the administrative difficulties are enormous. The US grid is owned by many different parties, and the regulatory authority rests with state governments, not with the federal governments. So it is for that reason that the Obama administration proposed to establish a national infrastructure bank so that foreign parties, such as the Chinese, would have somebody to talk to on major and complicated investments like these. But that hasn't happened either. You must be familiar with all the difficulties around the investment proposals by Huawei, which is one of the two major Chinese equipment and telecommunications equipment producers. I have no personal knowledge of all these factors, but there definitely is a strong perception on the Chinese side that the resistance to Chinese investments is too strong. In the United States is too strong.
Okay. Well, going off of that note, there's obviously a lot of economic issues that America and China are often quarreling about between the two countries. How much of an effect does political pressure from America have on China's pace of reform?
Chinese are very pragmatic people. If the pain of resisting American pressure becomes too great, they will do some things. But generally, foreign pressure doesn't work. Whether this is American pressure, Japanese pressure, or European pressure, doesn't matter. The system in China is very resistant to foreign pressure, but they're ultimately very pragmatic.
Okay. And conversely, I know we mentioned the Chinese government would like America to be more open to Chinese investment, but what other economic issues does China have with America's structure?
Well, you mentioned the investment. That is perhaps one of their major concerns. They're sitting on this huge pile of foreign exchange reserves that earns almost nothing for them. They would be much better off if they could invest a large portion of that in higher yielding long-term investments, such as U.S. infrastructure. Other concerns on the Chinese side, as being expressed from time to time, are about the policies of the Federal Reserve. They have objected to the quantitative easing policies on the ground that this makes the dollar too cheap, which allows big hedge funds and others to borrow very cheaply in the American market and then put the fund to use in other countries, causing problems. Brazil is more outspoken in its criticism of that policy than China has been, but the Chinese have been very concerned about American monetary policy after 2008.
Okay.
And fiscal policy, I might add.
Yes.
I mean, everybody knows that this country has a totally unsustainable fiscal situation. If the European Union were a political union, like the United States, their fiscal and their debt situation would actually be substantially better than the US.
And with both countries going into political transitions this year, America presidential election and China's leadership transition, it seems like there's a temptation to ramp up the complaining about these economic differences.
Yeah, I think you must expect that. This is a rare coincidence where you got major political change on both sides of the Pacific at the same time. I'm not sure when that was last the case, but now that the global economy has become so much more open and the interaction between economies is so much more pronounced, this is a new situation. Yeah.
Well, we'll definitely keep our eye out for changes in the economy, and hopefully we can have you back on again to help us sort through them later.
Thank you.
Thank you for joining us today, and thank you to our viewers as well for tuning in. We will see you next time on China Forum.